transaction tax in this list right now, because on that we're awaiting final clarity from the government on the base year rate, and there seems to be some discrepancy over there, and perhaps we'll get some changes. So let me talk about the other major amendments that have come through in today's move. Number one, the hit on mutual funds, specifically debt mutual funds. Now, essentially what's happened is that mutual funds which have less than 35% of their assets under management in non-equity asset classes, be it gold, be it debt, they will no longer get the benefit of indexation. They will be taxed as part of short-term capital gains, which in the current regime means you get taxed at your marginal tax rate. So taxes as per slab rate minus indexation, huge blow for debt mutual funds. Let's move to the next one. This is good news. This is actually coming in for the banking units which are operating at the IFSC GIFT City offshore banking units. Basically, they get an enhanced tax break. Right now, income from these offshore banking units gets exemption, full exemption, 100% for the first 5 years and then 50%. Now this has been moved up to a full 100% exemption for all 10 years since the time of setting up. So good news for those who have a bank in GIFT City. Let's move on to the third one, and this is a big one according to a lot of experts in the market. The tax rate on royalty which Indian companies are paying to foreign companies, non-resident entities, that tax rate has been increased from 10% to 20%. Now, only those foreign entities that have the advantage of the double taxation avoidance treaties, only they will enjoy the lower rate of 10%, in some cases 15%, but otherwise all other entities have to pay tax on this royalty income at the rate of 20%. So that could be a big hit for some of the foreign entities. Moving to the next one, there is absolutely no change in insurance, so the hit stays. That cap on non-par policies remains at 5 lakh. The industry was hoping it gets extended to about 7, but that has not happened. Similarly, there is no change with respect to taxation of REITs and InvITs. There was a lot of representation that was made requesting that the tax that is levied on what is called as the repayment of loans from REITs and InvITs onto their investors, that should be treated as capital gains and not income from other sources. Because if it's capital gains, then it's still tax efficient. Income from other sources means you get taxed at your slab rate, and that stands. The finance ministry has not gone back on it. So that continues to be something to watch out for. Last but not the least, no change whatsoever in the reinvestment of capital gains in residential property. The cap that has been levied at 10 crores on high-value residential property remains. You cannot reinvest capital gains by going into properties which are more than that value of 10 crores. So those are some of the key highlights from a market perspective in terms of the amendments that have been moved today.
Surabhi, thank you.